Today's interview is with Frank Greco. Frank's a great guy who's a full-time real estate investor and who's super passionate about real estate, just like me. But he's also really passionate about economics as well. We talk a lot about that in today's interview. So really fun guy, really fun conversation and really interesting conversation. So stick around for all of that. As always, like and subscribe on Wrestling with Real Estate, the YouTube channel. Go to the WWRE podcast and give me a 5-star rating and write a great review, please. It really does help us build this platform. And I'm looking to speak to as many of you as possible. If you're interested in real estate, in whatever capacity that is, I'd love to get to know you, see if there's any way whatsoever I can help you. So go to the link in the description down below or go to wrestlingwithrealestate.com. But before all of that, stick around for today's awesome interview with Frank Greco. Hello and welcome to Wrestling with Real Estate, where we look to chokeslam all your real estate problems. I'm your host, former WWE wrestler and now Cirque du Soleil performer, and of course, multifamily real estate investor, Barri Griffiths. Now today we're joined by Frank Greco. Hey Frank, how are you doing?
Good, Barry. How are you doing?
I'm doing fantastic. Me and Frank had an interview before the interview almost. We had a fantastic conversation now for about a number of different things. So it was really interesting. And I decided, well, we might as well start recording this, right, and share it with some people. Well,
absolutely.
Frank, thanks so much for making the time. I really appreciate you being here and kind of being willing to share your story and everything that's kind of going on with you. Before we dive into today's conversation, do you want to give us an idea about your background, what you've been up to, and what your current focus is today?
Sure. Yeah, absolutely. So I am a real estate investor for 24 years. Prior to that, I have an interesting background where I had worked for the Federal Reserve and JP Morgan Chase. My background is economics. So economics is always circulating around in my head and thinking about on how markets and what's happening and all that jazz. I started into real estate because I never really enjoyed the corporate environment. So I was a little bit of a nonconformist, I would say. And I started down a journey with a two-family a long time ago, which is still owned in the family, interestingly enough. And it's once I got started on it, I just fell in love with it so much because I wanted, for the longest time, years ago, I used to say, people would ask me, so what do you want to do, when you get older and when you grow up or whatever? When I was, like, for example, at uni, and I said, well, I want to do my own thing. I'm like, well, what does that mean? And I couldn't explain it to him what that actually meant. But now I do my own thing, and I'm very happy that I followed the course that I did. And real estate is so dynamic. It's such a dynamic industry. It's such a dynamic space where it's always changing and always evolving. That it's something that I kind of figured out, but it's still changing so much that every time there's a change going on in the real estate world, much like today, there's huge changes in the real estate space that we're experiencing in 2020, that it's fascinating. So it both captures my intellectual curiosity from my economic side of my brain, and then it also captures me from a passionate side of my brain where I'm really passionate about real estate because of my background. Mm. So I feel very fortunate to have been doing it for so long, and I'll probably continue doing it until 100 years old.
Yeah, well, when me and Frank first started talking, it was apparent within seconds his love and his passion for real estate, and it just kind of shined through straight away. So I was like, okay, this is going to be amazing. This is going to be a fun interview. We both love real estate, and as he told me as well that he has no problem speaking for hours about real estate. Right? We could do it all day, every day. So it's
absolutely,
it's great to have someone with the same outlook that I do. But going back a little bit, right? You said that you worked for the Federal Reserve for a bit, right? And you had a thing for where did that interest in economics come from? Because you said when you grew up, right, you'd like to do your own thing, right? But that doesn't, that almost is contradictory to someone who would be interested in economics, kind of a little bit, right? Don't you think, like personality wise?
Yes and no.
Okay.
So yes, I see. I certainly understand that perspective, but economics is the baseline for which uh, everything that happens in the world is economic based, in
Mm,
my opinion.
mm,
So of course I'm touting economics because I just love the body of work and love the study. But everything is economics. It touches so many areas of our lives. Um, any issues that come up, and people will question, well, why is this happening, or why is that happening, or why are the prices going up, or why is there such scarcity? And or like, for example, the other day I noticed that there was someone was asking, well, why does fruit and vegetables that are grown organically without pesticides, without all this extra stuff, cost more than the fruits and vegetables that are grown with all this extra stuff, GMO seeds and all that other stuff? I said, well, it's economics. I said, first off, I said, the natural organic stuff doesn't last as long. It gets bruised easy. It's more difficult for shelf life. It's handling. The stuff has to be picked in the fields, and then it has to be transported over to the supermarket. It's not grown in the backyard, that sort of thing, right? And I got into it a little bit more, but like that's sort of like the mind, but that's my mindset. It was like, why is something happening? Well, look beyond what you see, and then you'll see everything behind it, and the what's happening in the marketplace with these transitions. And so that's the reason why I found I was passionate about it, was because I saw that this is how the world really works, is through economics and the study of economics. And it's fascinating because it's part art and it's part theoretical. There is some empirical evidence that supports some theories that we tout, or that will argue for or against. Um, but it's just a fascinating body of work. And having had the opportunity to work at the Federal Reserve, a great place to work with a lot of great people, to go into the banking industry through the back door, and to see on how the banks worked, and how they affect people's lives insofar as lending and business and infrastructure and capital good investments, so forth and so on. What does that result in? Communities being developed, people being able to have jobs. All of that is one huge cycle that goes in. So it's very fascinating. Um, and it went for its course. And I started to get into real estate while I was at the Federal Reserve. And obviously the real estate world probably, I would say it's fair to say that it won over the economics world for me at some point. And I just went with economics. I went with real estate. Still, love and adore my economic side of me, but real estate and that's how I made the transition, because I I was working with some older people who maybe didn't plan for retirement, and they were worried about their pension or what kind of raises they were getting, and their retirement plans on what they can contribute, and if they would have enough for some sort of retirement. And I'm in my 20s, and I'm seeing people in their 50s and 60s, and these were conversations that we would have, like out to lunch, or even like sometimes during the day, like in the office. And I couldn't help but think to myself, wow, so this is what I want to, this is where I want to be. Like, I want to be 50, 60 years old, coming into an office and dealing with office politics and stuff like this, and worrying about if I'm going to have enough to retire on. Is that what it's all about? No, no, I refuse. I refuse to believe that. To this day, there's more, and it's out there. And if you believe it, you go for it, and you'll attract it. Which is a mental mindset aspect of it. But you have to believe that there's more out there, and seeing, and I loved some of those guys that I worked with, because they were in the industry for a lot of time, and they taught me a lot of wisdom about what went on. But I never wanted to be in that position where I'm 50 something years old, and worry about how am I going to afford post-retirement. I didn't want that.
Yeah.
So that was like a kind of like a branding iron behind me to say, get out and go.
But it's
So,
interesting, yeah. It's just such a familiar story, you know. Like you said, like these people that you see that are in the 50s and 60s getting ready for retirement that are worried, right? Are they gonna, for one, are they gonna, you know, they're disposable, right? You could be 55 and you lose your job, and where do you go from there when you're 55, right? You've been used to a certain lifestyle and you've been used to a certain job. How you reinvent yourself at 55, so close to retirement. But again, another thing as well on top of that is, you know, do you have enough for retirement, right? Is your retirement going to be enough? And it's like, these are the people you're supposed to aspire to be like. This is the path that you're supposed to follow, right? And I hear it time and time that people end up in real estate a lot of times, they have the same realization that you did, right? It's like, there's got to be a better way. There is a better way, right? And you know, why should I aspire to be that, right? When there can be something else. And I think it's tough, you know.
I think back then, it was probably the forefront of the FIRE movement, right? Financial independence, retire early,
Yeah.
that sort of thing. Because that would get me to doing my own thing. And that's what really I enjoy, you know, the most. Real estate is exciting. I never know how my day is going to, you know, turn out, but I wake up in the morning, I have a morning routine that I do. Um, and I'll go out and see what the day brings. And there is no set schedule with anything. Um, and it's kind of fun and exciting because not knowing what I would typically say, like what's around the corner, is fun. It's fun not to know. And so it's kind of exciting, you know, wake up in the morning, it's like, yes, I have another day to do this. And you know, embrace the day and see what it brings. And even if you don't know what the day is going to bring, to me, that's exciting. And in real estate, uh, uh, depending upon what avenues you know you go down in real estate, some are, I think, easier than others. I self-manage my own portfolio, and I absolutely love it. But when I pull onto a property, somebody comes out the door and, you know, oh, Frank's here, you know, and go out and like, hey, you know, Mr. Frank, you know, or that. I never know what I'm going to be hit with, you know. But but for me, it's exciting. You know, it brings, you know, joy, and at times it brings joy in order to be presented with, you know, an issue, and I'll listen, and sometimes it's not an issue, and sometimes, you know, they're just upset about something, a tenant that is, and then other times it can be something, and it's like, okay, well, this is what I have to deal with now, so what I had planned just went away. And there's a whole thing about, well, you know, plan your day or your day plans you and that sort of thing, and that's true generally speaking, but I think it's also true that you have to be flexible and nimble in the real estate space. If you're one for a militaristic type schedule, um, real estate uh, can throw a lot of curveballs at you at times if you're self-managing or if you're managing, right? Um, and that's kind of the allure and the charm. But if you don't do, but if you embrace that, and if you stay nimble to be adaptable to whatever what's being coming at you, then I think you'll be more successful because you're not taking this approach. Like some people throw up their arms like, oh, you mean being a property owner? I got to deal with the three T's, right? You know, tenants, termites, and toilets. Like, oh no, like I wouldn't touch it. Well, there's processes for that you could develop or copy from someone else, right? Or you could subcontract that stuff out, and it's not that bad. And why isn't it that bad to do that sort of thing and then have the lifestyle that you want, right? So as we were explaining before, like, you know, I traveled a lot, and I used to spend my summers in Italy years ago. And typically most days of the week, much like my Italian roots, I will take a siesta. And I certainly wouldn't be able to do that if I was still working on Wall Street. So
Yeah.
there you go.
No, that's really really interesting, and I want to dive into the real estate in a second, but I want to go back to your Federal Reserve days, and
Yep.
so I don't think everyone is aware about the Federal Reserve, and truthfully, I wasn't maybe a year ago. I really wasn't, familiar with the system about just how money works and the system works, right? Maybe for those people who don't understand, can you explain what the Federal Reserve is even?
So the Federal Reserve System is a quasi-governmental agency that was formed back in it's been a while. I think it's 1913, where basically it was to be a lender of last resort and a national bank, and it does a couple of functions. Primarily, it does there's the Federal Open Market Committee that drives monetary policy. You have monetary policy in the economy, and you have fiscal policy in the economy. Monetary policy is conducted through the Federal Reserve. Fiscal policy is conducted through the federal government. If they're going to spend more this year or to boost the economy, whatever. And then there's theories to that. So you have monetarism, and then you have Keynesianism. Keynes is John Maynard Keynes, an economist out of England, I believe, if I recall correctly, who was from the 1930s. And then you have the monetarism, which is conducted through the Federal Open Market Committee. They direct it. Then there's open market operations where they'll buy and sell treasury bonds and notes to the primary dealers, Goldman Sachs, and so forth. Then the other part of the agency, the other part of the Federal Reserve has to do with operations, like cash operations, where there's gold that is maintained in the vault of the Federal Reserve, and then there's also cash operations, like so you present a check for a bank. Well, that check will ultimately get to the clearinghouse, which the Fed will help orchestrate, and then cash goes in and out, that sort of thing. And it's devised to be a lender of last resort for when banks go into problems, or when banks have problems. That isn't always the case, but that's another story. And then now the Fed has morphed into this huge entity where they are not only buying and selling treasury bonds, but they're also buying commercial paper and other short-term corporate notes and asset-backed securities and what have you, to kind of prop up the economy, to provide liquidity. And that is certainly having an effect on the economy as a whole, in so far as the number of debt, the level of debt that we're getting ourselves into, the amount of money that's being floated in the economy, which is going to create inflation, right? Because inflation, the famous quote is, inflation is anywhere and everywhere a monetary phenomenon. So there's in the inflation that we're experiencing currently, even though there's a lot of people out of work, which has a drawback on prices, is in large part of the amount of money that's in circulation. So and it affects real estate, which is why real estate prices are going up. So those are primarily the roles of the Federal Reserve. There's also a regulatory side of it as well. That's the area that I was in. I was under this broad group of bank supervision, but I was in this specialized department called Specialized Examinations and Trusts. So I was primarily in the fiduciary world, trusts in the states when the bank was holding assets on behalf of someone else or in trust for someone else. We were there to, get into how safe that particular operation was, given that it was someone else's asset, someone else's monies. And then you get into bank failures and systemic risk, if there's a counterparty risk and that sort of thing, which is very interesting. But I might be losing a couple of people, or you at the it was like, what? Counterparty risk? What is he talking about? Right? Again, it's fascinating stuff. I absolutely love it. But it's that's in generally what the Federal Reserve does. and now it's a household name with where they've gone this past year.
Yeah, yeah. They also control the interest rate that they lend to banks as well, right? Which can affect lending in a bunch of different ways, right?
Yep. So the Fed has the overnight Fed funds rate, which is what banks will, what the Federal Reserve will charge for overnight funding, or basically that's the overnight fund between banks. So that's typically called the overnight rate of the Fed funds, or the Fed funds rate, and then that gets it grows as you get further away from that. So if two commercial banks are lending to one another overnight, that's very short term. You're dealing with a counterparty risk that is a AAA rated institution and has a lot of credit worthiness, right? So the rate's going to be very low. But how this translates into real estate is real estate, especially on the multifamily side, which is what I love. When you're investing in real estate, in short, what you're doing is you're buying a future stream of income. So it's very akin to a bond, because you're buying a future level of a stream of income. So if you were to buy an asset today, it's typically talked about in a cap rate. Like, what's the cap rate? So if you buy all this, you buy an apartment building today for, let's say, $100 million, and it's giving you $5 million net at the end of the year, 5% cap rate, you're getting 5% on your money. Simple enough. And cap rates, and some people even in the industry, I think, get confused about this, which is why I love my economics background for this, because you understand the correlation between when you're buying fixed stream income, even though it's not fixed, right? Because rents can increase, operating expenses can increase, whatever. That stream of income, basically what you're doing is, you're comparing that to a bond. So as interest rates have fallen over time, so when I first bought my first multifamily apartment complex, I was paying 9% interest. And it wasn't a hard money loan either. It was with a bank. Okay, like 9%. What? Is that crazy? So, again, 24 years ago, it's a whole other world compared to the 2%, 3% rates that we're doing now. But the effect on real estate, as interest rates have declined, people are looking for more yield. So they've moved from corporate bonds into real estate or in alternative assets. And in doing so, they're buying down the yield, which is why cap rates trend with interest rates. So as interest rates have fallen, so have cap rates, which is why we see cap rates nowadays. Like, for example, when I first bought my first apartment complex, it was a 2% cash on cash return. The cap rate was 15%.
Wow.
Okay. And nowadays to see that, it's like, what are you talking about? Like, he's drinking something, whatever. Like, that guy, he doesn't know what he's talking about, right? But the decline in interest rates have shrunk cap rates, as you've seen people buying more multifamilies and getting into this space for all the benefits, right? Depreciation, rent growth, et cetera, tax benefits. The prices of real estate have risen dramatically, and they're rising even still with the migratory flows of everything that's going on in this particular year, where people are moving, right? So, like, for example, New York City prices are going down. Florida, Carolinas, like at least on the East Coast side, which is where I'm at, are rising. And even in New Jersey, there's waves of, like, circles where people are migrating out, forcing up the prices of real estate. People are selling, and then they're moving further out, and then those prices are going up. So it's really fascinating to see. These are fascinating times. I just absolutely love, because this is like textbook economics that we're living right now. Like this, like what's happening this year will be in economic books in the future. That's the way I see it. But again, I'm an economics nerd, so.
In what way, though? What do you think about this year in terms of the money printing, in terms of the
Well,
immigration
insofar as
patterns?
the money printing, the change in the economy as a result of the pandemic, on how people will enjoy and become accustomed to working by themselves or working from home, and how that's going to shift um, cultural standards, cultural way of life. People aren't going to flock to the inner cities anymore to have a variety of entertainment for themselves, right in a densely populated city center. People are now going to become accustomed to moving further out, enjoying the ability for Amazon to deliver things, anything that we want, right to our doorstep without having to move anywhere. So it hasn't all played out yet, but I think inner cities are going to suffer, generally speaking, and it's going to be different depending upon where you go around the United States. But I also think but I think that's generally true, and I think that's going to be generally true even around the world, as people are using technology more, and the need to be in a city center is not as prevalent as it once was, starting from, let's say, the industrial era.
Interesting. So I was wondering, right, on a higher level, right, because there's no doubt about it, you can get, you're very informative, you're very well educated on this subject, right? But just on maybe a little bit of a higher level, in terms of the economy, right? Obviously, we all imagined that there would be a lot more effects at this current point, right? We're in December 18th today, and the pandemic hit early March, something like that. And obviously businesses shut down, we were in a lockdown, there's a lot of negative effects, right, from this, but yet it doesn't seem that there has been really necessarily a recession that's kind of hit yet, right? There's been kind of trudging along. Okay, there's been some pain, and I'm not saying that everyone's, everything is perfect everywhere, but it hasn't been this, cataclysmic, what is that word? A disastrous effect.
Yep,
Yeah.
yep. Or disastrous works too. That's fine.
Okay, yeah, disastrous effects of all of this, right? Do you think that that's just a case of time for it working itself out, or do you think we've managed to negate that big drop off, you think?
Well, as much as the eternal optimist, and I have been my entire life, I don't think that we've seen the true effects yet, because not everything has had the ability to shake out. As an example, so at a very high level, I don't think that we are past the storm, so to speak. And the reason why I say that is because there's been market distortions. So again, that's an economist term. Forgive me. I can't help myself sometimes. But
no, it's all good.
but the distortions are such as, for example, there's a moratorium on evictions right now for multifamily. There's a huge migratory shift with companies looking to cut their costs and get out of office space. So I think there's a lot of foreclosures and shaking out that will happen in the commercial space in the office segment. So, we all talk about commercial real estate, and for guys like me, it's multifamily, but commercial real estate is a catch-all phrase, right? And there's different tranches, there's different buckets of what do you mean by commercial space? Well, you have warehouse, you have medical, you have office, you have self-storage, let's say, and et cetera. raw land or whatever. And in the commercial space office, category, I think there's going to be a lot of shakeout from there. And I think that there's some opportunities there as well, where I think you might be able to, so let me back up for a second. Another area that you've seen some, a lot of harm and damage to is the tourist business, right? Because people can't travel, or people are afraid to travel. No one wants to get on a cruise ship, right? I was never on a cruise ship, so it's not my thing. But you hear people go on cruise ships and they get sick because of some food element, right? And now someone's going to go on a cruise ship with COVID? I don't think so. But that aside, the tourism industry has been hit very, very hard. The airline industry has been hit very, very hard in this economy. And there's talk in some circles about, maybe I could buy real estate, or maybe I could buy a hotel and convert it into apartments, right? So I think you might see the same thing going on with office space at some point. So I think there's some opportunities there, potentially, again, as things shake out. So, but the market has not been allowed to operate in its normal capacity, just like it wasn't able to operate back in 2008, where there was a lot of deferred plans to try to keep people in their homes and so forth. The most efficient way is, allow the hurtful stuff to happen, people being evicted or what have you, so that you could find a new equilibrium and grow from there. So there's been a lot of propping up with all this printing of money. There's been stimulus packages, which I think has helped, but I don't think we've seen the full effect of what's happening in 2020 yet. And as we start to get back to some sort of norm, possibly after the vaccine comes out, and if it's successful and what have you, and all that jazz, courts start to open up, offices are vacated, right? Because everyone's working from home now, and no one wants to go back working into an office. And why wouldn't you? I mean, why would you? I mean, if you have the chance to sit in your living room on a laptop with your laptop on your lap, right, and stay in your pajamas and work from home, why would you commute to work and commute for an hour? Or at least around New York City, commuting for an hour, if not more. Why would you do that? It just makes no sense. You could walk into your own kitchen. You could make yourself a cup of coffee, make yourself whatever you want to eat. Why would you want to go work, in an office building? Put your lunch in a refrigerator and have someone else steal it? Like, no, you'll just stay home. So I think it will shake out. Hopefully, I think you'll see more of a shakeout in 2021. If things start to open up in the springtime, I think you'll start to see more information coming out in the summer and fall of next year.
But do you think that there's a chance, things could be pushed back again, right? They've extended eviction moratorium here in Las Vegas till March 31st now, right? And they could essentially extend it after that, right? And they could, forbearances, I think it's been a year in March, right? That, they could extend that again, right? And they could print some more money and more stimulus and more, subsidized unemployment checks, right? Do you think that's a possibility? And if that's the case, like, are they pushing it down the road, or could they kind of somewhat avoid any big downturn? I don't know.
Well, there's certainly a big trend in modern American political history to avoid any harm, and for the government to come in with, a warm towel to wrap you in and to keep you safe, right? From yourself and from the world, or from whatever it may be at harm. But I can't help but again, the optimist that I am, I can't help but be somewhat alarmed at the possibility that there, so the universal truth of, action reaction, like that sort of thing, right? Positive energy, negative energy, like that's the universal concept. So for every action, there's a reaction, and for all the actions that we've been taking to reduce the level of hurtfulness or inconvenience that citizens may suffer as a result, there eventually will become a bigger consequence down the road. And what does that look like? That could get kind of gloomy depending upon where you go. So it could conceivably be that America finds a way, the United States finds a way to work its way out of it. Or worst case scenario, it could collapse with hyperinflation. The currency could collapse, and it's like, oh, like I'm not going to touch the dollar anymore. It's a fiat currency, which means that it's not backed by gold. No currency is backed by gold around the world. We live in a fiat currency, and we're somewhat abusive of that fiduciary power that we have to manage our own affairs. So when our debt levels, are exceeding our gross domestic product, it could have consequences where other countries may not want to invest in the dollar or see the security of the dollar or see the dollar as the beacon of safe haven, or the beacon in the harbor to go towards, right? Which is typically what is done. And you're seeing that now. I mean, the euro is rising against the dollar now, right? The euro fell as people bought into the dollar earlier in the year, and now that trend is reversing. And you also see the trend of countries trying to be a little bit more self-sufficient. So they're not interacting globally as much anymore. So it's fascinating on how this is going to play out. I don't have the answer. I mean, my opinions are just simply my opinions. And at the end of the day, nobody really knows. But it's going to be very interesting on how it could pan out, and what I referred and what I typically advise, what I'm advising nowadays to people that are in mastermind with me, or people who seek my consultation, is to get yourself in a position where you could weather the storm, whatever it may be. And hopefully there is no storm, but better to be prepared. Better to have the raincoat and the rain jacket, right, than to be caught in a downpour. So what that looks like in real estate is, if you can, deleverage, build up your reserve fund, so that if you do suffer from, if there's a lack of propping in the economy with stimulus checks and what have you, and people aren't able to pay the rent or what have you for the services that you're providing, right? Because you're providing a service, right? You're providing walls, the kitchen, a bathroom, water, common services, pools, whatever, recreational activities. If people aren't able to pay for that, and you're not able to go through the legal process to have them move on to somewhere else, then that's going to incur a cost, and you're going to need to be prepared for that. So I certainly hope it doesn't go as bad as some of the things that I just mentioned. Again, I am a natural optimist. I hope that it works out for the best. But people do need to be accountable for their actions. And sometimes when you're not doing actions, and you have these market distortions, as I said earlier, kicking the can down the road is almost like kicking a snowball down the hill, right? Eventually, you could always grab it to a point, but then after a certain point, you're not going to be able to grab it anymore, right? You're not going to be able to stop it. So that's what I fear in the worst case scenario. Just being a student of world history and seeing things where, like, hyperinflation, and we haven't had it. Like, I mean, most people alive today really haven't experienced. Like my mother, who's alive still, God bless her soul, was born during the Great Depression. No one has, and My mother's 88 years old. So no, but very few people have experienced something that traumatic, right? Where it's a complete change. And I'm hoping that it doesn't get there. So let's keep our fingers crossed, our good vibes vibrating out into the universe to say, you know, we're going to get this and everything's going to be okay. So.
Yeah. No, I think, and it's, you know, it's not that you're not an optimist. You've got to be a realist sometimes, right? And realize what the market forces are and what's going on, right? And kind of try and understand that to the best of your ability. And it's impossible to really make any kind of predictions or see anything that's going to happen because there's so many moving parts, right? But you want to try and understand. It's not to predict, but to best protect yourself, I think, more than anything else, right? And I think,
Right.
you know,
Right.
what you're saying, I think is prudent to deleverage and to understand what might happen, right? And like you said, may never happen, right? But at least you have, you know, those thought processes and that idea in mind of that this could happen. So I think that's interesting. Out of interest, like, and this is a big question, I guess, but if things continue and the dollar was to collapse, right? Would we still be okay in real estate? Would real estate be a good investment, or is that like so disastrous that we can't really like imagine or predict or see what something like that would look like?
Well, we haven't experienced it in a while, and when it had, when it was experienced, bad things happen, like war, right? I mean, so you had hyperinflation in Germany, right, prior to World War II, right? So again, just calling it as it is, right?
Yeah.
Yeah, I'm not putting any energy to it, but it's what happens because people are desperate, right? People looking for food. We have to live. Earlier in the year, I was seeing a story on how, you know, with the restaurants closing, whatever, there were potato farmers out in like Montana, Idaho, like most western part of the United States, and they had all these potatoes that they couldn't move because trucks were not moving, restaurants were shutting down. There was no, you know, demand for it, and they wind up digging a big hole with, like, you know, excavation equipment and what have you, and they threw out millions of tons of potatoes. And I'm, you know, and one of the things I learned from my mother being born in the Depression was, like, you know, you don't waste food, right? There's people starving in the world. And I tell my sons this to this day: if there's plate left in your food, eat it. There's people, you know, there's people starving in the world. So you have this with the collapse of a dollar, where paper money is useless, or it's so expensive, right? You know, like how many numbers? So like the dollar bill is going to be like, you know, a 2,000 or $1,000 bill. Like they got to add 3 zeros behind it in order for it to be something. Then after a while, like it's just not going to happen. Like oh, like I don't even want it. There's so much of it. You know, you don't want it anymore. So then it comes down to, you want just real things, like, you know, you want food and what have you. Um, that becomes a very scary situation in real estate. Typically, when money becomes useless, people go to hard assets. So, which is why, like, you know, you see a rise in Bitcoin. You see and Bitcoin isn't necessarily a hard asset. It's perceived as a hedge against the dollar, and that's a whole world. That's a whole Bitcoin and blockchains. That's a whole universe onto itself, right? So we won't go there. Um, so let's stay with, you know, gold, silver, precious metals, resources like material objects. You know, the rise of material objects and how they've risen. I made a joke early in the year because I walked into a store and I saw that a 2x4 went for like nearly $6. Where back in the beginning of the year it was $2. And I'm like, wow, like that's a 300% rise, nearly a 300% rise in the price of a 2x4. A very common thing, like a 2x4. So I put a post online, you know, on Facebook, like as a joke, like, hey, I'm thinking about starting a new business. Like, you know, let's buy houses, let's deconstruct them and sell the 2x4s and the lumber. You know, we'll make huge profits, right? Like that sort of thing. Insofar as houses are concerned, hard assets, real estate, land, typically rise in an inflationary standpoint. And we're experiencing that right now. Prices are rising. Um, and I think they'll continue to rise. So I think we'll be fairly safe. Um, but I don't know. The trick, the difficult part is summarizing how in an economic collapse like that, what are you going to do, and how you got to pay your, how you got to pay your bills, how you got to manage, and that gets back to deleveraging, having having enough of a safety net of fund, capital funds, just sitting there um, in as a reserve so that you could weather any storms. But I think overall real estate continues to rise. I think you will continue to see it to rise um, as compared to financial assets. So
Yeah.
I hopefully that answers your
Yeah,
question.
no, absolutely. Sorry, it's kind of a big question, but you touched on it. I was like, I always hear people talking about, like, obviously the Federal Reserve's kicking the can down the road, and there's going to be some effects down the road. But nobody knows. But I was just, interested in, maybe because obviously you understand this stuff very well, that what that might look like, because it's always talked about, but it's never really maybe touched on what that might look like. So I appreciate you tackling, because that was a big subject, the big uh, question.
Yeah.
Yes, but thank you for giving us your opinion. Anyway, well, let's talk about something a little bit more cheerful, and I guess, right, than the dollar collapsing, which is real estate. That was something that we both are absolutely passionate about. What does your real estate
Absolutely.
holdings currently look like?
So I am relative. So in the world of real estate, I own and operate everything myself. Um, I'm in the relatively the smaller. I'm in the lower level of, insofar as people in the industry typically will talk about doors.
Yeah.
I don't have a lot of doors. Um, but they're not syndicated. I own them myself, and as a result, and I'm very low leveraged. So my, so it's a several $1 million portfolio of real estate, and I do not have a job or anything like that. I just really take care of the real estate. I was vertically integrated for a little bit, where I had a construction company, and sometimes we did services for other people. We no longer do that. We stopped that a couple of years ago. And now it's just enjoying the real estate uh, with managing it, fine tuning it, and and basically doing some projects on the properties, some large capex projects that that have kind of been kicked down the road, as we were talking previously. So I'm tackling those now while this pandemic, I guess, goes on. I've been doing that all this year. I did have a partner on one property which I bought out, and that property became, while we were negotiating that property became a little destabilized, but it's now fully stabilized and doing well. But just taking care of some larger capex things, and also getting into some little details about reconfiguring some space on the properties to basically, in effect, to make them more efficient and to raise the net operating income. Like, for example, on several of the properties, we have garages, and typically the garages are just kept as as a staging ground for when we did renovations on the apartments, or just storage, right, for stuff. So one of the things that I'm doing, I have a 2-car heated garage on one property, where I tend to, where I've been filtering the stuff out, and we plan to, modernize the garage and, renovate it on the inside, put down like a nice garage floor, and we're thinking about, or I'm thinking about renting it out to some car collectors who want to keep their cherished cars. I'm not necessarily a car guy. I was a long time ago, but no longer. But they will want to keep their cars in like a nice garage that's heated. So and this is all going to boost the bottom line, the net operating income. And then that's primarily where I'm at in my real estate journey. I on a personal level, I was divorced and I was raising 2 kids, and that was spending a lot of my time. So, and I absolutely loved every minute of being involved with my sons' lives as they were growing up. You know, we used to do so much together, and I wanted to be a parent, so I traded a lot of time to be with them, as compared to growing my real estate portfolio. And I don't regret that choice at all. But so uh, with the real estate, I was able to keep and add on a little bit, a few more properties, but absolutely enjoy managing it, but also thinking about the possibility of transferring my portfolio into something much larger, a much larger complex, maybe like 100-unit complex. But what that looks like and where that is, I don't know. That's one of the things that I'm kind of like up in the air about. I don't like being in the cold. I definitely like, I have friends throughout the country, been traveling around the country. I don't know where I'm going to wind up, but eventually I think I'm ready for a move. And what that looks like and where that is, I don't know, but it's exciting to think about. So I'm looking forward to that next big deal, right? Where I could do I can get into the nitty gritty of a 1031 tax exchange, right, and transfer and find something that I want to buy and so forth and so on. So I'm excited about that. Just not ready there, quite at that point yet.
Yeah. Why do you want to transfer into a large property?
Well, obviously, so multifamily space, I think, is absolutely fantastic, and no matter where you are, uh, uh, you in any industry, no matter what you do, there's always what economists call economies of scale, right? Because you have less operating costs on a per unit basis when you're in a larger um, when you're on a larger scale than you are on a smaller scale. And mine is a smaller scale, broken up amongst a couple of different properties, but they're all like relatively close to one another. So, and I've developed some systems along the way to manage that quite effectively and quite efficiently. So, but a larger property serves a couple of different things. First and foremost, it's the ability to uh, take the equity that's in a property and to invest that in in a larger thing, so that now you could gain some greater tax benefits. Right, I'm nearly fully depreciated at this point, tax wise. So there's the opportunity for me to do that, and also the opportunity for me to to take on a little bit of a bigger challenge. I absolutely love what I do, and the sense of community that I've been able to establish with the residents that live on the property. I see them sometimes in stores, and I'll stop and I'll say, "Hey, how are you? What's going on?" And "Merry Christmas," or "Oh, your birthday? Oh, happy birthday," and that sort of thing. Um, but to do that on a more involved scale and on one property, I think would be a lot of fun and a little bit of a challenge. But like, for example, when I bought my partner out, it was like the relatively like large. It was a transaction, right? A buyout is a transaction, and there was a lot of negotiating back and forth, and we were dealing with lawyers and all of that stuff. And after it was all done, like half jokingly, I was going to send him an email like, wow, it was so much fun, like talking with lawyers and finding out the nuances of how we could structure this deal and so forth and so on. Like, could we reverse it and like start all over again? Just to kind of like engage in that, because because it's fascinating. Like all these different things that you could learn talking with real estate. Well, all right, so there's a law for this and there's that, and this is the way it was set up, so it has to be done this and it's legally and so forth and so on. So I enjoy that, like structuring a deal, negotiating with attorneys. I mean, I also went to law school. I don't think I mentioned that before, but so I'm not a lawyer, but nevertheless, it's and I always say that because I don't want to be thrown like a tomato or something like that when I'm talking in front of people. You know, but I absolutely love the opportunity to engage in that negotiation, in those negotiations, and finding the path on how you're going to execute your plan, right? You know, you have an idea of where you want to go, but now you need to work through that. And working through that journey is quite exciting. And so sometimes you hear people say, like, you know, it's not the work, like, you know, I love the journey, right? It's like life, right? Like you love the journey. Finding your way and dealing your way through those things, I think, are the most fascinating, because they could preoccupy our minds. I'm like, wow, like, you know, I didn't think about this and I didn't think about that. But how do we, so, you know, we have this problem come up. All right, so now it's not a problem. It's another opportunity for us to think creatively on how we can, you know, get around that, right? So let's look to, like, what can we do? Can we explore this? Can we do this? Can we do that? Like, that's fun and that's exciting. And, you know, you're dealing with other professionals and you're getting this deal structured, and like, that's exciting as compared to, you know, like sometimes the more mundane stuff of actually managing property. I mean, I self-manage. I love managing a property. I have no issues dealing with tenants. I absolutely love it. But there's that there's that ability to get into those complex transactions where it takes really like a lot of brain power and a lot of thinking and a lot of communication with other professionals. And it's all in the real estate world, right? Real estate law, taxes, whatever. So structuring those things is something that I'm looking forward to. You know, like, okay, how can we do this deal, right? Like that sort of thing.
Yeah.
So
Yeah.
that's one of the reasons. That's another one of the reasons why I'm looking to, and plus also to move to a warmer climate. You know, I grew up in the Northeast. Kind of tired of the cold days, and we just had a snowstorm. So life is not life is good for me, but you know, if I can be in a warmer climate, I would definitely choose to be so.
Yeah, I've originally from the UK, but I've lived in Tampa and Las Vegas, so I'm done. It's over for me. I can't live. I can't live anywhere kind of else except for those kind of places right now. Maybe California or Phoenix, but outside of that, I think everywhere else has lost their interest for me. Um,
Yeah, yeah, for
Frank,
sure.
this has been fascinating. It's such an like I know we only touched a little bit about the real estate side, but the economy side of stuff, right? The economical side of stuff is just so interesting and so important that we try and understand where we are today and everything that's going on, right? Because there's so much going on and there's more change than there has been in a long time. So I think it's you know very timely that we talked about this today, and I appreciate you kind of taking time to explain so many things and like I know I've learned a lot just from listening to you today, so hopefully a lot of other people have as well. But this show is called Wrestling with Real Estate, so I always like to incorporate some wrestling related real estate questions. And the first one is, what would your wrestling name be? If you picked a wrestling name for yourself, what would it be?
Uh, I would say my wrestling name would be Frankie the Handsomest Avenger.
Okay, Frankie the Handsomest Avenger. Okay, I like that.
Avenger.
Avenger, yeah. So every wrestler has a special move, right? It's their biggest strength. What is your special move in real estate? What is your biggest strength in real estate?
Managing. Love managing real estate. I could manage real estate blindfold.
That's awesome.
And I could usually, you know, work circles around people, you know, managing real estate and getting into the nuances of the construction, right? So I'm also a little bit of a nerd for, you know, construction manuals and like how systems go together. And I've learned a lot over the years. Yeah, I could build a house from ground up, literally. The electrical systems, plumbing systems, all these things are fascinating for me on how they work and what are the codes and all that stuff. But managing real estate is definitely my strength. beyond a shadow of a doubt. That and negotiations are two of my biggest strengths. But managing is negotiating, right?
Yeah.
Really, when
Yeah.
the two go hand in hand.
Yeah. Yeah. Brilliant. What's been the biggest body slam you've taken in your real estate investing career?
Biggest body slam, I think, was recognizing the economic side of my brain was recognizing the bubble that we were in, even though it was primarily in the single family space. And from 2000 to 2007, 2008, until it crashed. And although I was in the multifamily side primarily, and that's where I've always been, I've never owned a single family home.
Oh, wow.
So I don't know what that is. I was in the construction business, and I was doing some partnering with some people doing some spec building at the time, otherwise known as speculation building, right? Building to sell. And I realized that the market was getting ahead of itself. The alarms were going off in my head from the economist side of my brain, and but I was busy raising two kids and so forth and so on, and it was, the daily struggles of getting hung up into that. So 2008, I would say, would be my body slam, not paying attention to the little voices inside my head, my gut feeling, right? We always hear about listen to your gut. Listen to your gut. Do yourself a favor. Listen to your gut. If your gut's telling you something, right? That's energy in the universe telling you something, and it was telling me something, and I ignored it. So I was picked up, head over shoulders, and totally slammed down to the mat on that one.
Yeah, I'm sorry that happened, but I guess we learn from these things, right? That's how we learn.
Absolutely.
Yeah,
absolutely.
So was there a moment that you were standing on the top rope getting ready to jump, but you were too scared? What was it, and how did you overcome it?
I was probably, yes, I was on the top rope, to use that expression, looking to buy a much bigger place, a bigger apartment complex at one point. And I chose not to, because I was fearful of what it might mean insofar as the ability to own it, maintain it, and so forth and so on. I've since then went to go work on myself insofar as, rather than looking at unknowns and being fearful in this traditional sense, I've learned to flip things around. So now, when I think that I'm feeling fearful in the traditional sense, I say to myself, what does fear mean? What is FEAR? Oh, that's right. Face everything and rise. And the fear goes away. The traditional sense of fear goes away. And I jump. And I've jumped a few times, since then. For example, like leaving Wall Street, I left literally on a weekend. I called up Monday morning, totally unexpected, and I left. I quit. Like that was it. I was on the top rope and I jumped, and I never looked back. So I've been in the real estate business 24 years. That was 21 years ago. Now I left Wall Street in 1999, and despite the up and down and the side to side roller coaster ride that owning a small business or owning real estate can be at times, it doesn't always have to be. It depends. There's lots of different avenues that you can enjoy the benefits of real estate without actually managing it the way I do. Like I always recommend people go into a syndication where there's an asset manager and they're managing the asset for you. You don't have to do anything, nothing. Just sit home and collect rents and get depreciation and and live the life that you design for yourself, right? Like that's passion, like that's living, right? So so being able to, you know, get over that hurdle, and that's every time I think of the word fear, my knee-jerk reaction is face everything and rise, face everything and rise, face everything and rise, you know. So it's just like now it's branded into my head, right? Face everything and rise.
That's brilliant. Because, yeah, because I think fear a lot of times is that thing, right? We just think about it. We just need something to snap ourselves out of it, right? It's just something, and you know, I think I can't remember. There's something like the 3-second decision or something like that. You know, you give yourself 3 seconds, and then after 3 seconds, you've got to go and do it, right? There's something along those lines. I'm probably getting it completely wrong, but it's because the longer we think about it, and the more hesitation we have, the less likely we are to do it. So, like you said, face everything and rise is just something that triggers your brain, triggers you into action, and that stops that fear from kind of manifesting itself into something bigger.
There's a whole body of work in an area called neurolinguistics,
Yeah.
where certain words trigger certain events in your head and certain actions. And one of the books that goes into that, not so much neurolinguistics, it's a book talking about the subconscious mind, and it's one of my famous books that I recommend to people. So I'll share it with you if you don't mind. It's called What Do You Say When You Talk to Yourself?
Oh yeah.
It's an absolutely great book. And what you say and how you say it, you know, really it goes out, but then it goes in here and it teaches your subconscious mind that's going to internally navigate where you go. So be very cognizant of what you're saying to yourself.
For sure, the words you use matter. The words you use matter massively, and actually how you phrase them, right? Like for the longest time, I do a daily podcast now, but for the longest time I was saying, oh, I try and do a daily podcast, or I want to do a daily podcast, or right now I'm releasing my podcast daily, right? That's completely different to now saying I do a daily podcast, because now I recognize as that person that does a daily podcast, and anything below that is not me, right? But because now I identify as that person, and that's just a simple example that I've noticed recently. But the words that you use matter, and how you phrase them really matters as well. So I think, yeah, that's really cool. Well, Frank, this has been absolutely fascinating. Really, really has. It's been like an awesome conversation that we've had. I really enjoyed it. So I really appreciate you being here today. But if someone wants to find out more about what you've got going on, and maybe even just to reach out to you and talk to you, how could they do that?
Sure, very simple. You can just email me. It's frank at safeharborinvestment.com, or you could find me online. I'm on LinkedIn, Facebook, and very easily attainable through email, or like I said, through one of those apps. I'm also on Instagram, Safe Harbor Investments, at Safe Harbor Investments. So very easy to follow me there. Typically, most of the stuff that I do is not really real estate related. It's more mindset related, because I typically will, in my experience dealing with real estate investors over the years, it's not necessarily the real estate that's very hard, it's the mindset. So I typically say, owning real estate, very easy. Getting you in the right mindset, that's the challenge.
Sure. No, absolutely. You're preaching to the choir here. I could not agree more. The information is out there for everyone to understand how to do real estate. It's just about taking those action and moving forward and doing it. That's the hard part, right? Or that's the problem that people have, is doing that.
Right. And I always love seeing people succeed. Always love, I always enjoy that, where I see people struggle with something, and if I could help them in some way, just to get around the corner and get to that spot where they want to be, that makes my day. Yeah. That really makes my day, because there's so much abundance in the real estate world, that there's so many different avenues that you can go down and be successful at. And there's not a given path for any one person. Like there's no one path. There's thousands of paths. So if I could help get somebody to go down a path and experience some success, nothing is more satisfying. So I
Really.
really enjoy that. So thank you so much for Barry for having me on. I really enjoyed this. It was a lot of fun. Talking to you and having the chance to talk about economics and so forth. So it was absolutely so much fun, and I hope I gave some value to your audience.
Oh, for sure, for sure. I know you did for you, and you definitely gave me some value as well. So I really appreciate that. That was a great fun talk. Have a great rest of your day, and thanks for being here.
Okay, thanks. You too.